Doc here from North America. Good morning, good afternoon, and good evening. Let's see if we got everything running right. Alrighty, I think we're set and running. Let's see. I will know in a few seconds. It looks like it. Let's see. Yep, there we are. I see it now. 3134. Excelente. Here we go. Let's see if we hear the voice. We're all good here. Let me see. Double check that. Yeah, yep, there we are. Okay, good. There we are. All right, let's check it out this morning. Let's take a look at the Swiss against the dollar. The dollar seems to be perking its head up again, just as you thought it was safe to go back into the water. As much as everybody would like to try to short what looks like the obvious disaster, it's not the obvious disaster as everybody thinks, solely because, as we try to always inform everybody, most of the other countries... Oh. Hey, Robin, can you hear me now?
Are you up on the webinar?
Yeah, it just got going. There was a delay.
I can't find the
Yeah, go refresh it, and then it'll pop up.
Alright.
Yep.
Off of what? Off the YouTube?
No, yeah. Just the Dukascopy YouTube. Just click on it again, and then just hit refresh.
Okay.
All right, bye. So, as I was saying, what the real issue is that there's more countries in trouble financially than the United States, which seems odd. You know, when you say, "Oh my God, they got 29 trillion in debt," but we have income of about 23 trillion a year. That's not bad. Whereas there's countries out there like Japan and China, and like a Greece. Everybody knows about Greece in particular, where you have, and there's so many more, where they have a debt, say of I'll give you a hypothetical. You have like a China that has a alleged income of say $12 trillion or 15 or 9 or whatever it is that they think that they have, and they publish every year and they claim that that's what their gross is, the way the United States is 23 trillion. And then you find out that they're in debt for 50 trillion, and like 3 and 4 and 5 times. They say China is in so much debt it's in the hundreds. Like the way I think it was Greece is 50 times in debt to its gross domestic product every year. So in other words, if Greece brings in $500 billion or something of that nature, they owe 50 times more than that. So in other words, 25 trillion. Japan, same situation. I believe Japan is 251, last I saw. Can you imagine that? You're 251 in debt. Now, how does that equate to the American debt? Well, we have 29 trillion in debt, and we have GDP of 23 trillion. So it's about 1.1, 1.2, not 100, just 1.1, 1.2. So when you try to figure out, when is the dollar going to collapse? When is it going to go away? When does everybody run and hide? Well, not until everybody else comes down lower. So in other words, Japan has to fall back down to say, 20 times ratio or 5 times ratio for people to want to be, selling dollars or buying yen, that type of thing. And it's the same way across the planet. They really say that they can't even figure out the numbers for China. China is supposedly so much in debt. We only can tell how much in debt they are is when you see a situation like Evergreen, where Evergreen owed, a payment of $16 million, not billion, not trillion, 16 million, and they couldn't find the money. In other words, they couldn't dig it up. And so when you see things like that, your number one, real estate holder in your country, and you can't help them as a government with $16 million, not billion, not trillion, 16 million. That tells us something. It tells you how much debt they are in, how much cash they don't have. That's the only way we can measure it, because you can't really trust the numbers, because none of the numbers really make any sense. They don't give us any evidence that the numbers that they're talking about. The only numbers we could trust is how much money, how many dollars were going and are going to China, and how many dollars they keep here in America. In other words, they buy, like China's always saying how they're not going to buy any more bonds, but somehow or another they have about $1 trillion worth of bonds, and it doesn't seem to, it goes up or down, 10 or 15 billion here or there, but you don't see a wholesale move of, say, $275 billion moved out. You don't see that. So the only way we can as traders try to understand when is that reckoning day coming with the dollar, well, it's a long ways off, obviously, until these other countries can straighten out, become much more financially stable. All right, after that, I need a sip of my tea. So there you are. You can see the Swiss got all that red going on. You can see over on Chicago Quant, you can see the bar there moving up. You can see the white line, just like the white line on J4X. So let me use the mouse to point them out. So you see, where is it at? Right here. White line is turning up, just like it is turning up here on Chicago Quant, right there. And over on J4X, again, oh, there you go, it's even larger now. It's turning up there, but it's still not through the dashed line. I would assume with the strength we see over in Chicago Quant that the J4X will catch up in about 3 hours. So that's the action we're seeing. With the dollar, it's stronger than it should be in intellectual terms, on logical terms, because people look at it and they go, well, they owe $29 trillion. Where are they going to find that? I don't know. In a given year, we actually make that. It's like buying a house for 50,000 euros, and you have an income of 50,000 euros or 48,000 euros. Can you afford that house? Sure. It's an easy payment, isn't it? If you bought the house for 50,000 euros, well, what are you paying a year? 8,000 euros a year. You're making 48,000. Yeah. That's the problem. Is that who do you sell? If you're going to sell dollars and run away from them, who do you go and buy? That's the problem. And that's why we watch the pairs trades. We watch the major pairs trades in particular. Like here, you see the Swiss staying inside its range or around its range. That's what those red dashed lines represent. When we go over and we look at the euro, right here, we see it playing at the bottom end of its range, right there. Matter of fact, we've now Fibonacci'd what we think is the true range instead of the old range, and we have the Fibonacci sequence sitting on top of it. And you can see we've gotten down to the 0.23 right there, and it found some strength, and now we're playing with the 0.38. And we're really thinking that the whole range probably is right there, that what is that, 108.30 basically, 27.8. So they trade inside ranges because the central banks keep them inside their ranges. They have a way of measuring what they refer to as who's manipulated and who is not. I don't think that one I'm not even going to touch with a 10-foot pole. Not with a 4 centimeter pole. Definitely not. Not even going to discuss that because it's not even that one. No sanity at all can be described on that one. All right. So you see that there with the euro, and you see the euro this morning. It went into the daily sell there yesterday on Friday. You see we're still in that weekly sell from this area here. Let's widen it out so you can see it a little bit better. Right there where the pink line is. You see that right there. It's been in the sell for a while. You see over here on J4X, showing the same pressures. There we are, right there. And you can see all the yellow we have right there and how it's trying to press down. And you can see it's starting to generate the reds here. Same situation. You see the white line trying to break down. And I imagine by the end of the day, if it stays in this price area, we will start to see the J4X join in with the selling there. All right. And trust me, traders, watching RSI or MACD or any of those others are nowhere near as accurate as watching the J4X with the two different stochastics doing their battle against each other. Remember Doc's old webinars where I used to say two algorithms battling against each other? That's pretty much what it came down to. All right, and then over in the cable, I did see some strength in the cable this morning. There it is right there. You can see it's trying to lift up. See that right there? It's trying to do something. It's not there yet, but it's trying. And you can see the weekly is having its issues too. Whereas we went into that weekly sell back in here on that week, and that's the close of that week, and that's where we always put our mark. Just like on the close of a day, we put our mark. And you can see that the pressure has been on the downside, and it's playing with that range that we think the new range we've identified. It's a wider old range, that's all, and it's probably adjusting for the inflation factor, which is something to adjust to. I mean, it's bad enough that we have inflation and we're not seeing interest rates even remotely match the inflation. That's strange enough in its own right. The fact that they're even minus is even crazier. But and we're not even going to get into that, because if I got into that, you'd be carrying me out with a straitjacket. I'd be going totally nuts. So I try to steer clear of what is true insanity. But in the end result, with 4 or 5 or 6% inflation that we see right now, anybody buying bonds and paying interest on them at the same time must be a very poor trader and desperate to covet the assets that they have. That's the only reason you would buy an investment that loses money. And you can create those, and the thing is that you can create synthetic bonds and not be trapped. So it's kind of confusing why some of these people even remotely are in this industry. I guess they're just salespeople in the end. All right, another sip of the tea. And from there we jump over to, oh, you know what? Let's put it up on J4X too at the same time. Put the lid back on my tea. There we go. And let's see what it looks like on J4X. And then what we'll do is we'll take a look at the Turkish Lira. I did see some news. I was going to say I haven't seen any news on the Turkish Lira, but then I did. There was a small article that popped out that said that they stopped the coup in Turkey on like Friday or Saturday or something like that. I hadn't heard it again. I haven't seen it again, but there was a little article out there claiming something like that. So I guess there's frustration, when you see the Turkish Lira. And you can see there's the cable going down like that. Let's put the Turkish Lira up there now. Right there. When you have your currency go from 1.5 to, where's it at now? 13.78, 13.78. So it's going from 1.5 to 13.7, basically, or 13.8. Or you could even say 13.5. Take your choice. Doesn't really matter, does it? And the end result, the dollar Turkish lira right there, you can see, has been in a weekly buy for a while. You know, the math has caught the whole ride, and it's been in that weekly buy right there. And what else can we say about that? And you have the same leadership. I think that's what the frustration probably is. When you have your currency going from 1.5 to 13.5, and the same leadership is involved, I guess what you have is you're going to start to get more and more people that are going to be doing, wild things. They're going to be like angry. They're going to be frustrated. I'm sure there's a lot of frustration going on there. So, I guess that's the only way to describe that. Now, let's take a look at it over on the J4X, and we'll take a look also at the same time. We'll go and look directly at what I call the best of it all, and there it is, the euro against the Turkish lira. And we'll throw that up on the Chicago Quant, because this is the real game, I think, in my head. I find this to be the real indication of what's going on in Turkey. This thing seems to be more accurate than the dollar Turkish lira, and we think that's that location thing. And there we are. As you can see right there. Did I just see the silver 1 minute chart? I didn't know we had a silver 1 minute chart. Let me just double check what that is. What is that all about? Activate and delete it. There we are. So, let's get the Turkish lira back in there again. Alright, where's it at? It's here somewhere. Just had it. There it is, right there next to it. So you can see here it's holding up pretty well. It's still in the buy. I think the other one went into the sell. Let's just take a look at dollar Turkish lira. Right there. Yeah, see, it fell into the sell on Friday, and now it's perked its head back up. At the same time on Friday, I guess it made all-time highs. 1389. Right there is 1385. So that's really wild. You can't take the short, of course. Why, traders? We're in a weekly buy forever. We've been in a weekly buy since back. Oh, you can't see. We've been in a weekly buy since back here. So there's no way in the world you take a short there, and there's no real options to trade in it. So it's hard delta or nothing. Quiet day starting off on a Monday. I don't see anybody talking or asking anything. Kind of quiet. So I'll take a sip of tea. There we go. And let's go back to the euro, Turkish lira. Right there. So this is holding up very well. If I was involved in Turkish assets, I think I'd be a little bit more hedged and protected. You can see here we've thrown those crazy numbers out where we say went from 1.5 to 3, from 3 to 6 to 6 to 12, and we were looking for that 12.5, and they gave it to us, and now we have highs in the 16s, and I'm worried that the next real dilemma will be, and I'm not talking about in the next 12 hours. I'm talking about down the road, 5, 6 months, 7 months, something like that. Maybe a year. We're probably going to be seeing a crazy number. Maybe it'll be Fibonacci. So we went from 1.5 to 3, from 3 to 6, 6 to 12. Maybe the next one will be half of that. Maybe it'll be 18. Maybe we'll see 18 in there. Maybe a year and a half, 2 years from now, if the leadership is still the same leadership in the direction that they've, keep the same policies, you might see a 24 Turkish lira against the euro. I don't know. We're in uncharted territory at this point. All we're doing is following our math and the characteristics that we have seen throughout the decades and so forth in the century. I guess you could say the century that we've done our math through, back tested over a century of work through it. On the scientific side, we've gone as far back as 37 million years. The math seems to have that consistency over 37 million years, looking at galaxies and the way they expand and the accuracy of predicting the thermodynamics of it. And we take a look at the temperatures and the way they expand and decrease, and we see that our math follows them or let's say predicts them very well. So, when you look at it this way, down the road, unless the leadership changes and the policies change, I would imagine you're going to see at least an 18 Turkish Lira. And I'd imagine if it keeps on going on for the next couple more years, I would imagine you'll see a 24 Turkish Lira. I guess it'll double again. We saw the ruble do that. I mean, the ruble went from 4 for a long time to 8. And then from 8, we went to basically 12 or 13. And long-term capital management situation all occurred during that time. And that was peanuts back then. What was it, $2-3 billion, $4 billion? But it was a lot of money back then in the 90s. And now where do we see the ruble? We'll take a quick diversion away from where we're at now, but let's do it on J4X. But right now you see the ruble, after all these decades now, is trading at, where is it? Right there. It has somewhat of the same type of situation, the same policies and structure and laws. And so where do we see it trading? At almost 74. I remember the days when it was at 4. So, it's not going to happen in the next 3 weeks. But, down the road, if you keep the same policies and the same type of leadership, what else can you expect but the same thing? Isn't that old Einstein saying something about doing something over and over and using the same tools and concepts and expecting a different result? It's that type of thing. So, all right, we jump over to the Canadian now. Let's take a look at the Canadian. It perked its head up even more. And look, it's down today. It looks like right there. And Canadian's been in that weekly. Whoa! Don't need to move that. Where did we steal that from? Darn. You see it's been in a weekly buy since the 24s. 25 and a half. And we are now, today's high is 28, basically 28 and a half, 28.43 or 429 type of thing. And Friday's high was 54. So it's, it's hanging out up in there, but you can see the pressure starting to come in again. Maybe they'll buy, they're seeing some, I would assume people are thinking, hey, are they really going to become more responsible in the United States? We saw that meeting a couple of weeks ago where, the Prime Minister of Canada and the President of Mexico say to Mr. Biden, your policies hurt. Your ideas don't work. Maybe we go sip tea here. Yeah, so he sat there and they said to him, stop it. But, Uncle Joe, Mr. Biden has always been Biden. We've put up with him for 49 years now. And there's not much of a difference of the Joe Biden today as there is 20 years ago. He's been just as wacky. So, probably the biggest problem for Joe Biden right now is the fact that he has nobody to hide behind. As a senator, he could do these foolish things, and he wasn't the center of attention. And when he was vice president, he did these foolish things, and he wasn't the center of attention. He could hide. But as the president, he can't hide. So that's why we've never seen a president treated this way by their staff. It's been the strangest things. They said all these horrible things about Reagan and Bush, how stupid they are, and how unresponsible, not responsible, and Trump just recently, clueless, he's an idiot, all these things they tell us over and over every day, my God. But unfortunately, you don't hear that about Mr. Biden. And the whole country and the polls show that they're fed up with him. People are flying planes in the sky saying horrible, nasty words about him. You know, it's all over the place, and the media doesn't say a word about it. But in the end result is that we've never seen, as I said before, we've never seen a president treated the way he's treated by his staff. They, they actually, you know, he comes out, gets all fired up. He says something about something. You know, he's fervent. He's, you know, committed. You know, he's got heart in whatever he says. He gets angry at whoever asked it. And then less than like 3 hours later, the staff comes out with a memo saying that he didn't mean it. And that he really does support what's going on. And people are like, wait a minute. So when he speaks in live to everybody, you can't trust what he's going to say because the policy will shift the moment he's done. So that's the weird part about having him as president is he's not respected by the people who work for him. They seem to be running his campaign, running his administration, and it's pretty clear at this point. People, that's what they say on the in the papers and everywhere around. It's like, who's running this place? Because it's not him. Because they keep on, you know, basically changing his, you know, when you see what he says live and then what they do, it's totally the opposite. So it's, you know, really weird there. So anyway, you know, looking at the CAD, you know, basically bottomed on that meeting. And we saw the same situation with the Mexican peso. The Mexican peso went flying up from like 20 to 22. So we're, you know, when we look at the Canadian and we look at the Mexican peso, we're not really sure how much is influenced by the policies here in the States or the policies in their own countries at this point. You know, it's a guess. So you can't really, you know, normally you would follow a pairs trade on the policy of a country. You know, their employment, you know, you look at their GDP and you look at their inflation and, you know, you look at the CPI, you know, Consumer Price Index itself, and the PPI, Producer Price Index itself. You know, you're looking at those things and you look at the interest rates and you try to put that all together. But in this case here, when we look at the Mexican peso and we look at the Canadian dollar, it's a real guess what that all is representing. Because we've seen the leadership of all three, you know, the United States, Canada, and Mexico get together, and they come out of that saying, no, we don't go with you, Joe, we're against you. And so, you know, and he is threatening, or his, let's say you can't really say it's Joe threatening or President Biden threatening. It's really his administration is threatening Canada to shut down a major oil line that comes from Canada into the Michigan, the state of Michigan. So that's why we saw the currency make that big turn when it looked like it was, you know, heading down. You know, you can see here we were at the 50 percentile, and then all of a sudden it parked itself underneath there. They had the meeting right here, and the next thing you know, now it's going to the high end of the range again. And we saw the same thing. Let's just show you over in Mexican peso. Mexican peso did the same exact thing. You know, same exact. We had seen 22 in, I don't know, 4 years or something like that, 3 years, something like that. Let's see what let's take a look at it on J4X. Right there. Let's put a weekly in there. Oh no, we'll just scrunch it up like that. Yeah, we hadn't seen the 22s all the way since late, what was that? That is October of 2020. Yeah, so what is that? That's a year and a half. That's what that is. You know, Trump was president then. And so you can see, you know, these two particular currencies are a window into what's going on globally. You see that, how they function like that. All right, from there, normally we go over to the metals complex because of the Canadian and take a look and see. So let's see what they're doing with oil and gold this morning. No questions, it's quiet. Everybody's kind of exhausted. It's a TGIM. Thank goodness it's Monday. Now there's gold. You can see trading at 1779. I think that's down a little bit. Let's see. Let's put it up on the Chicago Quant there. Right there. And there it is right there. You can see it's about flat, I guess you could say. You know, closed on Friday at was that 1783, almost 84, and right now we're at the futures contract is trading at 83. The spot is trading at 79. There's a $4, spread there. This is the February contract, so you can get $4 if you do the arbitrage, but I bet it costs you a lot more money to just move that gold at the end to deliver it. That's why I think they're shutting down the London play. They don't do that London play. A little more tea there, excuse me, people. So that's the gold. Now, I did see oil back month closed in daily buy on Friday. Let's show you that. Let's put it up on J4X too, right there. And let's see, right there. There is the front contract, which is flirting with the daily buy today, as you can see there. Weekly still got a lot of work to do. We've been in the sells since the low 80s, so the weekly caught the action, no problem. And then let me just show you what the June or the spring contract looks like. Right there. Now it went into the daily buy on Friday. The back months, they started reaching for the back months first. You can see the strength in it there today. As you can see here. There we are. You see that's moving up well. And the weekly's got a lot of work to do. We've been in that sell, like I said, since the in the case of the back month, the high was I guess it went into the weekly sell somewhere in the mid 70s or mid 75 or something like that. And you can see it traded as low no more than 3 days ago at 62. So it was about a $13 move down. Whereas in the front month, you see it went into the weekly sell in the 81, 82 area, say 82, and traded down that same day to 63, which is wow. So that's like a $19. The front month really collapsed. It's like a $19 drop almost. So you're looking at $18, $19 versus the spring contract. Let's go back to that spring contract. What's that? A $10 move? So the front month they were running away from the front month, and as you can see there, we should put this up there like that. There we are. And you see here, it was at best 75 that week when it closed and confirmed, and we see it trade down to 62, 68. So you're talking about $12.50 compared to almost $19 in the front month. So that's that delivery thing. That's what allowed oil last year, was it last year? I think it was last year. That made it go $40 minus. Yeah. So oil traded at $40 minus on the exchange floor. So in other words, you got $40 to buy oil. Someone paid you $40 to buy oil. I guess it's like the European tradition, I will buy your federal bond from your government, and at the same time, I will pay you interest to buy your bond. Strange world. Strange financial world. Alright. So there's the energy complex, and we've seen Mexican peso and ruble now. Why don't we take a look at the South African rand and see what they're doing with that this morning. There's the rand there. Let's put up on Chicago Quant. Somewhere there it is. And the rand seems to be trying. It was in a daily sell. Yeah, so it's still in a daily sell since what is that? The 1st, December 1st. and it's going nowhere so far. And we're in the weekly buy, so you really can't take the short. You're just kind of stuck in that neutral zone, you know. Don't be long, don't be short, be neutral. Hey, there we go, middle age. You think there will be a Santa Claus rally in the indices this year? I thought we already had it. Could be more. You know, it all comes down to the policies of the Federal Reserve. Do they want? I'd imagine. You know, first of all, we keep on hearing from J.P. Morgan Chase, and we hear from Goldman Sachs, and I think Morgan Stanley. All three keep on claiming that there's between $7 and $15 billion a day going into the market of the stock market. So that's a lot of money, because the stock markets only trade maybe 10-15 billion a day. Excuse me. Tea went down the wrong way. So now let's take a look at the four stock indices. Let's see, where's it at? Right here. Excuse me. So what you're seeing right now is the Dow Jones Industrial Average right there, live, trading at 236 plus. Right here, we're looking at what the Dukascopy calls the Tech 100, the NASDAQ 100, trading minus 47 points. Okay, this is a 15,700 index. This is a 34,800 index. Then we see the S&P 500 trading up 16 points. Now, at one point or another today, we've seen the Dow very firm, and we've seen the Tech minus. What's the low there? I mean, we see it trading right now. It's at 673, 674 right there. You see that? The low today is 592. So it was down another 120 points at one point today. Okay? Matter of fact, that might be the low right there. No, that's not the low. It's probably might be during the London hours that did it. Let's see if we can get this. See what this is. That's the yeah. So it might be like. Let's see if we can find that low and when it happened. 592. So to give you an intelligent answer, the first part we have to realize is that what indice are you looking at? Will it be in the NASDAQ 100? Will it be in the Dow Jones Industrial Average? You see what I'm saying? These things are acting so separated in many ways, So there's the what low is that? What is that? That was Friday. So let's go to the beginning of trading in Sunday night, right there. And it started off in this area here, and then you can see it made a break somewhere. Where is it at? Is that it? Could that be the low? That is 687. And we're looking at, there's a low out there somewhere of 592. So where is that? Looks like during the London hours maybe. Start of the market. Yeah, see that? There it is. So they do it about an hour after the European Open right there. There it is, 1609. Where is that 592? They got a trade in there somewhere saying that it went down to 592. There's 609. That's not far off. But, so, comparing that, at that time when that thing is down almost 200 points, the Dow Jones Industrial Average at that same time is trading at 34,664, which makes that up like 40 points. This was up 40 points. That's down like 200 points. Now this is up 239 points. And this is down 38 points. So when you say, is there going to be a Santa Claus rally, it's really hard to say in what product. Are they going to reach for the very heavily intra-sensitive ones? That's what the Tech 100 is. So more than likely not, because I think you would think that money would be steering clear of them. That's why we see it having issues. Seeing it being sold down. Because just for that reason alone, they're very intra-sensitive, and so it's really hard for them to show life in it. At the same time, let's throw a let's see what we can do here. Let's let's show you the. Let's drift over to that right on the J4X. Yeah, right there. You can see here on J4X 34,800 on the Dow Jones Industrial Average, but the all-time high I believe is like 37,000. So, do I think that they'll climb back up to 37,000? And I have to honestly say, until the math turns, no. And let me show you the math. As you can see here, I guess the high is, maybe that's it, 36,446 back in November 8th. So do I think they're going to go take that out? Not until we get back into a weekly buy. Now we are flirting with a daily buy right here. You can see that right there. We've been in the sell on the weekly since the 36,000 area, and we went down to 34,000 over the last couple of days. There's room for it to go up, that's for sure, but I need to see my math turn before I believe it. I hear them talking about it on the networks and wonder what you thought. I think that the networks are relatively clueless. That's what I think. As far as they're concerned, you don't even know that there's a quantitative easing. So that really messes things up right off from the beginning. If a network is not talking about quantitative easing the way I do every day, then obviously they're not trustworthy to begin with. And they're just trying to help the brokerage houses, talk their book. Does that make sense? Because it's disingenuous for anybody in the financial community to talk about the markets every day and not include, the elephant in the room. The elephant in the room is quantitative easing. I mean, it's frustrating. They're out there. We're into an inflationary period, and they're printing an extra $100 billion a month in new money. I mean, no, you don't hear people say that out loud, and that's a bad thing. I mean, that's what inflation is from, printing of too much money. Yeah, I hear you. To me, the subject is pretty clear. If you listen to anybody in the financial community, in the media, like myself, or a prognosticator, someone who predicts direction and so forth, like my newsletter type of work, and if they don't talk about the actual things that we're seeing every day, then they're not worth listening to at all. That's the way I look at it. So if they don't talk about quantitative easing every day, and they don't talk about the inflation every day, and they don't talk about who is really buying. I mean, obviously, the buying is not. We all know this is not the mom and the pop. We know this is not private investors lifting this market up. We know it's government money doing it constantly, day in and day out. And if they're not willing to say that day in and day out, then they're not telling you the truth. Because we all know that they're putting out $100 or $105 billion a month right now. Supposedly they're tapering, right? So they're reducing some of the amount of money they're printing. But they're still printing $100 billion a month. And the ECB is still printing 60 billion euros a month. And who knows what the rest of the countries are doing. So, I guess the best answer is we get into a weekly buy, I'll be the first one holding the Santa Claus bag. I'm ready to be long. But until we get into that weekly buy, no thank you. All right. From there, we'll jump over to the last one we didn't finish in the currencies. Let's do that. Let's finish the yen. And then we've done all the currencies that we normally do. And there it is, the Turkish yen, dollar yen. You can see they're trying to lift that up, which means that the dollar is getting strong and it's becoming weak. We've been in the weekly sell since here, and the thing is pretty much unched, fighting its way back up to there now. Hey 47, how you doing? GBP JPY, I was hoping you'd jump in. I always forget what that is, and you know, if I remember it, then I will talk about it, but I hold off waiting for you to show up. GBP JPY right there. And as you can see, it's trying to do the same thing as the dollar pair is doing. It's starting to lift up. We've been in that weekly sell since here. And what's this? 2, 3, 4, this is the 5th week, but look at that nice bounce coming out of it right there. And you can see the daily is doing the same thing. It's showing some real life in it. So I think that shows the strength of a dollar, right? That's how you interpret that. Strong dollar, weak pairs. Let's take a look at it over on J4X. GBP JPY. Right there. Yeah, I'd like to see that clarity more. And then you have to throw the strange caveat out there, with what we've seen over the quantitative easing years, where you have central banks actually borrowing from the Federal Reserve to flatten their books for the year, which is like, are you kidding me? You guys are printing money for free. Why don't you just print an extra $500 million a month, and then you can flatten yourself out? Why are you taking it from the Federal Reserve? When you see that type of action, oh, I'm glad you like that, 47. No problem. When you see that type of action, where you see central banks borrowing money outright in front of you from the Federal Reserve to flatten out their positions for the year, how much pressure are they receiving from the Federal Reserve? I would say a lot. In other words, if you're printing 60 billion euros a year, I'm sorry, what a year? What am I, crazy? 60 billion euros a month, new euros. Every month you're printing another 60 billion more extra, okay, out of thin air. And then at the end of the year, you need to flatten your position out. And you go to the overnight window, borrow it, which we can see, from the Federal Reserve, like, 34 billion, or, we've seen 28 billion at the end of the year flatten out, that type of thing. If you're the ECB and you're borrowing that money through the overnight desk from the Federal Reserve, how much pressure is on these individual central banks to stay in their lane, I guess you could call it? In other words, to follow the rules of the Federal Reserve. It must be horrendous. It must be incredible. There must be incredible pressures on everybody, and the Federal Reserve is the bully on the block. So these are the evidence that you see live. You see it published by the Federal Reserve. I saw, was it last year? I saw Britain come in, the Exchequer borrow 34 billion in cable, in dollars, to flatten out for the year. They had to flatten their books out. I mean, how much micromanaging is the Federal Reserve doing across the planet? It must be enormous. And you don't hear anybody talk about it, like how embarrassing that must be for, an individual country or group, like the European Union or the Exchequer, that they have to go hat in hand to the Federal Reserve and say, oh, please lend us this money just for 72 hours or 2 weeks, and we'll pay you. And that's the weird part. We see the report on how much interest they pay. So, they go and they pay like, $500 million in interest. It's like, are you kidding me? You guys are printing money every day. Can't you guys figure that out? Obviously not. Obviously the Federal Reserve tells them, you'll print X. And if you print any more than X, you're going to get punished. I mean, I don't understand that. How else can you describe it? I don't know how else to describe it. It's that insane. Doc should be wearing 3 tinfoil hats, after that conversation. It's like, because I'm sure if you say it to anybody, they go like, oh yeah, right. And I go, here, you look at the Federal Reserve's, borrowings each month, and you look and see who borrowed money from them, because they publish that. And then you go and I've done that on the webinars here. I've actually shown those numbers, and you go, wow, how come they don't talk about that on the news? It's like, because they're part of the gang. They're all part of the Federal Reserve gang. That's all it is. The major news information sources in the United States are all working for the same group. So, alrighty, that's where we leave it off when it comes to the pairs trades. If anybody wants to see anything at all, just fire it out. From there, we're going to go over to the commodities and take a quick rundown and see what's going on. So I guess we can go like that. There you go. And let's go over to here. And there was the Dow Jones Industrial Average. Let's take a look at silver this morning, see what they're doing with silver. Silver is having its issues too. We've been in that daily sell since back up in here in the 25.5 area. This is in the March contract now. I think back in the DEC contract it was almost 26. Who was it? Usually middle-aged would tell us. Was it 20? What was those numbers I told you to be offering at? 25.75, something like that. 26, something like that. And then you can see here, we're going on a third week now in a weekly sell. That week from the 25s closed that week. Where's the close at? I guess. Let's make that go all the way up. So the beginning of that week, let's see, there's the 22nd, there's the 19th. So that day it started off at, what was that, 24.59, that's the high. And then by the end of that week, they were trading at 23. Oh, it was a big article. I saved it. What's your thought on the cryptos? You think it's ready to pop? Oh, up on the upside? I imagine, it's a margin thing going on right now. Remember, the cryptos are leveraged about 50 to 1, and the stocks are leveraged at like 3 to 1 or 6 to 1. So there's a lot more volatility in the cryptos. I'm a supporter of the crypto universe. Think it's a good asset, but I would not, I like to combine these things with options. So I wouldn't be that fast to be buying anything without it being able to be hedged. Let's go over to that. Where is it at? Right here. Sorry for the sip of tea. Right there we are. We've been in the weekly sell. Let's make that bigger. So the week of here, we were in a weekly sell when it was in the 65,000 area, 60,000 area. It closed that week literally 58.5. So we went into the weekly sell somewhere in here. You can see here the line was down below most of the week. And now we're trading down in the 47,000 area. We were in a daily sell from a day before the all-time high. So we went into the daily sell the day after the all-time high. And then we went into the weekly sell and we stayed in that sell, I guess all the way down to there, to the 55,000 area. Showed a little strength. Back into the weakness, threw it into a buy there, and we've been in a daily sell for a couple days here now, like that. So I guess that's, we try to follow the math. So do I think it will go back up again? Sure. But not at this moment. And there could be profit taking, and there's all kinds of strange policies coming out of Washington, and Biden's people are saying all kinds of weird things about taxing profits that are not taken. So in other words, you buy something for 1,000 euros or $1,000 or 1,000 yen. You buy something for that, and you go and you sell it for 2,000 yen or dollars or euros, and that's taking a profit. But if you buy the same thing but you don't take the profit and it's at 2,000, they want to tax you. So you're still long it. You haven't taken a profit. They want to tax the profits that you haven't taken. I mean, these are some of the weirdest things that come out of Mr. Biden's administration. So that's where we are. All right, traders. It was a beat up the financial media day. We will talk to you all tomorrow, same time, same channel. And anybody has any questions, fire them out. I'll stick around for another minute or two. And I guess that's the only answer I can give you is if our work turns up, yeah, I think we'll see a pop. And do I support the idea that cryptos will have more value to them over time? Yeah, I believe so. I think they want to go up. I think their natural instinct is to go up. Just because of all the irresponsible type of central banking that's going on now. So I'd imagine if anything else, it could be literally manipulation by the central banks to hurt the cryptos at the moment. So it could be just as simple as that, not counting the leverage. Alrighty, this is Doc from North America. I don't see anybody asking any questions, so... Oh, here we go. See you tomorrow. Okay, take care, middle age. Take care, 47. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta, traders.